welcome to the MTM channel. I'm your host, MTM, and in today's video, I wanted to talk about the true nature of the markets. So what we can see here is what is called the market maker cycle. And this is the true nature of the cycles because the institutions, the banks, hedge funds, etc., all of them make up the market makers. And being able to understand how what they do and what clues they leave can help us as retail traders, but those who are smart retail traders, to understand how the market moves and how we can profit along with the market as it moves, and to identify the trends as well as the reversal that happens so we can capitalize with it. So what we have here is this screen here is giving us an overview of the market maker cycle itself. So what we see here is we see this what is called consolidation. We have what is called a stop point down here, a level of rise, level 2, level 3, creates a M over here, creating a new peak formation, and then the cycle continues over and over again. This happens on all markets in all time frames, but let's talk about this in more detail. So the agenda really is going to be pretty small, and then we'll jump onto the charts themselves to see what everything looks like. So what is the market cycle? As I mentioned, the market maker cycle is how the market makers themselves move the markets. You and I can't move the markets ourselves because it would take a lot of money and a lot of lot sizes, a lot of pips in order to move the market itself. So that's where the hedge fund, banks, and all the other institutions come in to go ahead and do that. Now they have their reasons as to why they do it. Obviously, it's to make money, but there are different ways they can go about doing it. But there are three phases to this market cycle. One would be the accumulation phase. So that would typically happen during the Asian session itself. It resets the daily high and the daily low, depending on the type of pair you have, whether it is a pair like Australia dollar, New Zealand dollar, or the Japanese yen, for example. They react a lot during the Asian session because that's when their news will come out and they may do something that's slightly different. For other pairs, it typically depends on what the market makers in that area are doing. Typically, it's quite quiet, but that varies quite a lot, especially in the last couple of years as well. Expansion is when this typically happens during London session, so that will typically where the market makers will create a stop hunt either in the upside or the downside to induce traders to go in that particular direction. So for those people who are watching this who do breakout trades, this is typically where you guys see a lot of this stuff happen. Once that's done, then the high of the day or the low of the day will start to form, and the market makers will move in the direction, the opposite direction of where the breakout is coming from. And then there's profit taking. So that will typically happen in the New York session, and depending on where the pair is in that particular part of the cycle, it may continue what happened in London, or it may reverse to create either the higher day where there's a lower day, or vice versa. So can it be seen on all time frames? Yes, because the markets are fractal in nature. What you see on a daily chart is what you'll see on a 1 hour, 4 hour, 15-minute, even down to 1 minute chart. But what you're seeing in all those points as well is the candles just represented in those different time frames. So what we see here, this is the weekly cycle from a long perspective. So what we have is this peak formation down here. Then we have the rise upwards. If you notice here, typically there's 3 pushes to make to go into a new level. So the level 1 of consolidation here, we can see here. So at that point, we see you have 1, 2, 3 pushes. Now typically this will happen within the day itself, depending on how long the level of rise goes for. It can be a day, it can be a day and a half. It really depends. And then ideally what you'd like to have is a stop hunt. So that's here. This level consolidation, that's where the market makers will come down. So remember, that is the expansion phase I was talking about earlier. Followed by the profit taking phase as we come up. So we have consolidation, then we have or accumulation, then we have expansion, and then we have profit taking again, and vice versa. So what you see here, you have 3 to 5 levels of rise or drop. They don't always typically happen Monday, Tuesday, Wednesday. Then you get a reversal. Sometimes it might happen on Tuesday, it might happen on Thursday. It all varies and depends. There's variations deep into this. So what you can see here is that you can see price heads upward here. This consolidation. Then we do a stop hunt. Now on the 1 hour chart, on the 1 hour chart, you can see here, price typically will just do this and move on. But when we look at the 15-minute chart, because everything is now less compressed, it will do something typical to that. So you can see here that that is typically what's happening. This is just on the 1 hour time frame. So what we see here is that at different levels, there are different directions in which you can buy, you can trade in. Now, if we're doing a week cycle long, this will be known as a peak formation low, and this up here is known as the peak formation high. So when you have a peak formation low trading to the peak formation high, you will buy, you will trade away from the peak formation low going up to the high. So in this case here, if we were to zoom in on this on the M15, we would look and see a W here, or it might be a double W known as a 2-2W. And what we want to do is we want to enter in at our given candle pattern. A video will be coming soon around the candle pattern that you should know in order to pretty much win 90 to 95% of your trades if done correctly and also with the right timing. Like, comment, and subscribe, and stay tuned for that video when the video drops. So what we have here, we will then take the trade, move in these 3 pushes. It'll end the day either in consolidation or an M, which pretty much may not go anywhere. And then we have level 1. Then we're looking for the bias. So the once we know where the view formation is, that is our bias moving forward for the next 3 to 5, it could be even longer days, so we can understand where is the market maker trend going. See my previous video on the true trend versus the fake trend to understand that one in more detail as well. And what we can see here is that we got the stop hunt, and then we move upwards, level 2. It gets choppy here, stop hunt, move upwards, and that's practically it. Now, in regards to what it looks like on the chart, we'll see that in a moment. So, once again, how do we trade a cycle? It all depends on where you are in the cycle. If you're trading away from the peak formation, you're simply, in this case here, on this weekly short, I'm trading this M here, so I have my level 1 on come up. This stop hunt, once again, on the H1 chart, it looks like this. On the M15, it will look like an M. So we want to take the M, and depending on if you are new, you would want to take it at the neckline area. If you're more experienced, you'll take it probably around this area, and then we probably will have candle patterns to go into more detail on that. You take it, and then you take the trade downwards. Again, take trade downwards until we hit level 3, and then we trade back upwards. Now, how do we identify when we're at level 3? This is where we have things called the exponential moving averages, or the EMAs, which help us identify where we are when we look at it from a 1 hour time frame. So that is how you would identify where you are in terms of that. There are other ways you can do it as well, but in a upcoming video, I will talk specifically about EMAs and how they relate to the cycle, as well as how do they relate to exiting and entering trades. So stay tuned for that one. Now, let's take a look at an actual live example so we can see what that looks like. Okay, so what we can now see here is that we can see here, I'm using US oil as an example on my 1 hour time frame. In my brown rectangle over here, we have this peak formation. And then up here, we have also the other peak formation. So if we now take what I was talking about into example, we can see here that this here is known as the peak formation low. Up here, we have the new peak formation high. Now remember, what this means is that the market is now going in that direction. What we also see are these EMAs as well. I'll cover these in more detail in another video. as well as the TDI, which we covered in by itself in length for another video as well. So what we see here, this is happening on a Tuesday. And if we drill into this over here and look at it from, let's say, around this perspective here, and jump on it here, what we have here is we have the market makers coming in, consolidating down here. And if we step through this here, and if we step through it, what we can see is the following. So we have the Asian range here. We have some level of consolidation, and then the market makers break out of the Asian structure, coming downwards. Now, in this case here, this would be known as as far as I'm concerned, a type 1, because price is not hitting this area over here to make a W. Now, this is more of an advanced variation of the basic ways of taking an M and W. A video for the advanced patterns will be coming soon for those who are more experienced in trading. So what we see here is we see price come down, coming back up, and what we see over here, which is very important, this here is called a stop hunt over here. Now this leg here, if you look at this chart here, using the line chart, the first leg is here, the second leg is around here. But when we look at it from the candle, what we can see is that the market maker induced people to go short. Now, one time, this was all a red candle, and then it came away. So this, we have the first leg here, and we have the second leg here. Now, depending on where you put your stop, the market maker have access to know, your broker has access to know where all the stops are. So it's not really too much of a thing. And as long as you put your stop loss in terms of pips, if you know how long it's going to be, how many pips you'll have, then you might be able to withstand this without actually taking a hit. Because we would look at entering this after the close of 13 EMA, which is this red line here, we would avoid having this issue altogether. So if we enter in after 13 EMA, we're entering it here. Yes, even though technically there is like a bit of a difference between that, but it's really depending on how you as an individual would take this trade. I personally would take it up here just to be on the safe side, or possibly taking it here. Now, if you look at the H1 chart again, we can see a couple things here. And I will highlight this more in the EMA videos. But we can see that all these EMAs are widely fanned out. This is a very good indicator to say that you're entering in the level 3 has happened, because these EMAs are fanned out. And we can also see a W form as well if we look at it like this. If I take this line chart here, that's the first leg, and then the second leg comes lower before coming up. And if we see down here, we see that if I was to draw a line here to here, that line is going downwards, while that line is going upwards. This is called divergence, and in the TDI video I'll explain this in more detail. But this will help you also identify that new information is coming, along with this RSI line, which is the green line, crossing over this dynamic baseline, which is yellow, as well as the signal line as well. Now we can, if I was to look at this on the M15, and I would see the same thing. I would see the same thing here. So we have, as well here, we have divergence here. Price is moving upwards, where price over here, down here, the line is moving differently. So it's divergence. Plus, we have the green line above the red line and the yellow line, giving us an indicator, which is right here, where we should go. So now that we have the peak formation low established, what do? So we would each day our directional bias until the level 3 peak formation high present itself would be to wait for the stop hunt, see if a W would form, and then take the trade accordingly. So in this case, if I just speed this up, now. then see the price will then move upwards. So what that means for us is the following. What that means is we're now buying here. So depending on the time you're trading, you might be able to buy here in this area here and hold it in. We have a stop hunt to the EMAs right here. So if I was to take a replay of this, about this section here, while we have an M structure here, we're still looking for buys. Now in this case here, the only thing this does is literally make this formation and then move upwards. Now depending on how you would take trades, you could look at it as a way of taking your structure here because it closes above 13 with a shift candle right here. Or if you're waiting for another leg to happen, it didn't happen in this instance. So that's what I want to show in terms of the peak formations here. And then as you see over time, if I continue to move this upwards, we get a little bit of consolidation before price steadily moves upwards over time. And as you can also see, the EMAs themselves are fanning out as well. They're starting to cross over each other, and that also gives an indication of, okay, what is happening here. And in that EMA video I was mentioning earlier, it will go into more detail of what these things mean and how you can capitalize on them as well. So with that in mind, I just want to give you guys an understanding of the true nature of the markets. Now this happens for any pair. All you need to do is be able to have the right tools and the right methodology and technique to understand what is happening here and how you can buy or sell into the peak formations that are currently going on. So with that in mind, I hope you guys have a great day. I hope you find this video informative. Please share this video with other traders that you know that are struggling and would like to have a change in their fortunes. And also, please comment and let me know of any videos you would like to see next, and I'll put it in my list of videos to make. And I look forward to hearing from you guys. So from the MTM man, thank you very much, and have a great day.